And the Trading Man here. Tonight, going to cover the indexes and the VIX and talk about the larger time frame levels in all these products, and also give some analysis here and what's really going on. We've seen some choppiness recently. Obviously, you can see the chart, great move higher for a lot of these indexes, but there's recently been some choppiness, and we can look back and see why that may be. So starting with the S&P, we're going to focus on a few levels tonight. It's going to be our blue, our white, our red, that's the 38.2, the 50, and the 61.8. We can see these levels on our left, those ratios. On the right is the price. The green level is typically a target. That's going to be a negative 23.6. So looking at the S&P here, we can see this is a 50% long that traded back in the early thousands and again during that financial crisis in 08 and 09. And this is a max monthly chart. So the chart lengthwise goes to the beginning. Every candle represents 1 month, so very large time frame. Now, this ended up completing its target 1912, and then there's a couple different variations we can use here using Fibonacci. We can look at the swing low of 2020 and take it to our new swing high, and that is close to what the S&P pulled into this past year in 2022. The other variation we can use is going to be a setup using the high of this prior 50% long and just taking it to our new high here. And if we draw up these 38.2s, then we'll see that this setup did trade its 38.2 level and the low to high 50% long setup as well there. And so there may be buyers in both these areas. Even this 38.2 level was getting bids as well. And from there, we've seen a great move higher toward new all-time highs. 48.08 quarter is that prior high there in the S&P, and we are heading toward that. We'll see if we get there. Moving into the daily time frame, this is where it gets interesting. So we can see that it took a little bit of time, right? Last year we came into some support starting in May, and then it took some time to really get going, but then we finally got enough bid to take us out of this resistance, and more recently, we've seen some aggressive moves higher. So taking a look at this sequence now, we're going to use our swing low. This is from October of 2022, and we can see a 50% long traded late October completes its target. If we take the same setup to the new high, this also ended up trading and going to its target. And if we take the same setup again to its new high, this traded the 50% level 38.41. We also see the 38.2 level of that max chart come into play as well, 38.02. This became retested back in March of this year. And then more recently, we have rallied into this target of 43.40. And so we can see how all these levels are coming together and they're helping the S&P get buyers. Now with this most recent completion, what we can do is a couple things. Similarly to what we saw in that larger time frame, we can have a low to high draw, or we can have a high to high draw. So the high to high is going to be from our setup here into this high. And we can see that 38.2 level trades, the 50% level did not trade. We did end up completing this target recently. And then from there, the other variation is we have a rollover period. So June, that third Friday of June, the S&P contract for June expired, and in September was the front month then. And so we can see that sequence would be this low to this high, and that has also completed. So different variations, but they give us a similar result here. And at this point, the S&P is trading inside of this high to high draw once again. And so we can see 45.65 quarter and 45.51 half are where we're getting buyers. Currently 46.36 is this target. We'll see if that becomes completed and where we go from there. But going to the 1 hour and talking about some of this choppiness that we've seen where we had this nice move, then we had a sharper pullback, and now we're going back up again. And we can see for the past couple of weeks we've had this up and down a little bit. Even though I know overall we're seeing buyers come in, I think it has to do with the fact that we have been so aggressive recently. All the indexes have been very aggressive. We haven't seen bigger pullbacks really. I know this is a sharper pullback that we saw on Thursday, but in the grand scheme of things, we've had a tremendous run higher without much of a pullback toward larger support. The S&P, the NASDAQ, the Dow are all similar in this way, and they're also trading different setups on the larger time frame. Typically, we see them being more synchronized and trading similar setups. And I have found from my experience with using Fibonacci that when the indices begin to do this and they're trading different setups and they're not quite pulling back deeper like they used to, it leaves room for a sharp move lower at some point. I can't predict the future. I don't know when that move will come. But what I am being more cautious about currently is the fact that we could easily roll over. And if we were to fail, for example, this current long setup in the S&P, by breaking below this red level, that's how we tend to fail these setups, by breaking below a 61.8 for a long setup and breaking above a 61.8 for a short setup. In this case, we have long, so we're looking for breaks below this red level to fail it. If we were to see this level fail, then we have a lot of room to run lower just from here, right? We can go back to that daily time frame, and basically our next support, there's a couple options. We have the extension long here, 44.61, 44.07 quarter. We could also draw a rollover low to high 50% long. That would give us a 44.92 area. But the point is, if we were to break this current setup that we're inside of, we could see the S&P move down to 44.91. And then if that setup were to fail, we could see the ES pull into 44.61, maybe even 44.07 quarter. We could see how big that is already. And if it were aggressive enough, there's plenty of room where we could see a pullback all the way into a 50% long. That's really hard to see happen. There'd have to be some bigger events going on, but that's just an idea to get an idea of what the markets are capable of, right? And like I said, this doesn't have to happen, but I'm just saying from my experience, I've seen times where we get so aggressive like this and we haven't really pulled back at all, and it's not going to surprise me if we do see a pullback into just some of these levels here. I think a move to 4200s isn't that likely. It's a very, very sharp pullback. I think there have to be other factors, like I said. But a pullback into 4490s, 4407, in between at 4460, it would not surprise me. It wouldn't. We saw this, I think it was last year, 2 years ago in the fall, a similar sequence occurred, and we saw all the indices pull back very sharp into just a larger setup that made more sense. Moving to the NASDAQ. Very similar. There was a 50% long. I'm just going to draw a 0 to a high here. And basically, that is what the NASDAQ came into. It was 1126.5 was that 50% level. And we saw it complete its targets and then run very aggressively. And so when the pandemic occurred, we actually saw the NASDAQ trade this high here of the prior 50% long to our new high. And the 50% level did not become tested. It was very aggressive. This blue 38.2 level became traded. And then we ended up completing targets. And what happened was this setup, we can see, got buyers, right? This 50% level in 2022, early in 2022, got buyers and had some reactions. Ultimately, we broke below the red level. That led to a failure of that setup. And so we would just take the same setup from before to our new high. And that is what the NASDAQ pulled into. So this was our window of opportunity for the NASDAQ to fall lower. And it could have run into 11,224 or 95.12. And basically this 38.2 level stuck again. But we can see how there was that much room there in the NASDAQ, and we fell right into that and then started to get buyers again. Pointing that out just because of what I just said in the S&P, there is this room where, let me go to a 4 hour so it's a little bit more clean looking. There is this room where if this aggressive setup were to fail, we do have room to fall into the 4460s, 4410s. And just keep that in mind. Don't be too surprised or get scared of the market heading lower if we do see a pullback into these levels. Right? That to me is a healthy pullback to help us keep going higher. I'm not saying that we're going to see shorts take over. That's not what I'm suggesting. What I'm suggesting is that we're going to see a pullback into some healthier long setups at some point soon. Now, going from 11,224 quarter. We can go to a daily time frame here, and we can see that there was a 50% long from the low of the year 2023 to our high. 11,850 is this 50% long that ended up trading. The full 50% long from our swing low did trade its 38.2 level, but not the 50. Didn't quite come into play. So we're going off the year-to-date low to high. And then we ended up completing some targets here. And just like the S&P, we became very aggressive. We can see a high-to-high setup traded. And then it ended up trading again. And then basically ended up trading again. Now, what ended up happening more recently is that the aggressive setup, a new high-to-high, ended up failing. And so it seems like we could pull into this 15,267, 15,021, right? There's this room here for the NASDAQ to head lower. And this is why we're seeing some of the sloppiness in the market recently. What's the S&P doing currently? Currently, the S&P is holding a long setup. A high-to-high setup is holding in the S&P. The NASDAQ failed that type of setup and has room to head lower already. It broke this and has room to head lower. The S&P has not. So we're seeing some divergence. The S&P is capable of holding long still. It makes sense. The NASDAQ broke a long setup, and so it could potentially have more shorts. It could potentially head lower into 267 or 15,021. And that's where we're seeing some differences, and again, why there may be some choppiness. And just in general, for those that are day trading futures and things like that, you may have noticed last week, the S&P had some long setups, couple shorts. The NASDAQ did have a fair amount of short setups in the market that week. And the other indices didn't have as many as the NASDAQ did. So just something to point out and notice. So from here, we are seeing the NASDAQ start to reverse. If it makes a higher high, then we can take this setup that we saw fail and draw to the new high and see if that trades again. Is it more technical? Does it hold? Otherwise, there is room for the NASDAQ to fall back here, it seems, into these larger support levels. And again, I'm not suggesting that we're due for heavy shorts and a big move lower. I'm just saying that there could be a healthy pullback soon in these indices. And I'm still a buyer. I like buying. Going into and I guess I should point out one more thing with the NASDAQ. The argument that you can make in the NASDAQ is that there is a rollover sequence. So let's go to a different drawing set, make it blank so it's just easy to see. Basically, we have this rollover from June that we talked about, just like the S&P did. And if we take our 50% long here, we can see this traded, it did complete its target. And if we take the next setup, using our swing low of that prior setup to the new high, we can see that this 50% long did trade. And so it's a different variation. However, there is reasoning behind why there are buyers stepping in here in the 15,560s. And we're seeing a move now toward its high. We'll see if it breaks through and ends up running to a target of 16,298. Now going to the Russell, this one's really interesting. And I actually want to pull up IWM because this futures product is new. It used to be TM, I believe. Then it changed to the RTY back in 2017, 2018. Now, going to IWM, this is the ETF of the Russell. We can see there is a full 50% long from our low of 2002 to our high of 2018. This traded during the pandemic, 102.84. It then completed its target. And so I was waiting for this setup to occur, and it finally came into play in 2022. And I have a lot of shares of IWM from 170, 175, 180, because this is a massive level. This is a huge level in IWM. This is a max time frame setup in the IWM, and it has a target of 200 and basically 80. And its second target, if it gets there, is 336. So it's a very large setup in IWM that could potentially give really great returns if it gets there. What's in the way currently are a couple 50% shorts. We can see the Russell has a 194.96 and a 203.48, 50% short setup. If we can break above 213, 214, 215, that will take out these shorts. it will allow for more long setups to trade in the Russell. It will also lead likely to a higher high, an all-time high, and eventually a target completion if we can get above this 213 area. So I like this setup a lot. This is important to note because the NASDAQ, if we look at the daily here, it has broken. If you draw that same setup in the NASDAQ, that's broken. We've broken above this 61.8 here. And if we look at the S&P, and if we draw that same setup on the daily time frame, that high to low 50% short, we've also broken above that 61.8. So these indexes have broken through. The Russell is the last one remaining to do so. And so it's likely going to occur. Typically we see 3 indexes lead 1, not 1 lead 3. We have 3 heading toward their highs. We're likely going to see the Russell start to follow that, and we're beginning to see that aggressive move. And again, if we can break above these shorts, we're setting up for a great move in the Russell toward higher highs and those targets. The last thing I want to talk about tonight is going to be the VIX. And this could also give an explanation as to why we've seen some choppiness in the indices recently. So let's go back to a daily or a 4-hour. We'll do a 4-hour here. So there have been a lot of short setups in the VIX. And typically when we see shorts in the VIX, there are likely longs in the indices. It's an inverse relationship between the two. So currently we have a 1560, 50% short, helping the VIX have sellers head lower. And we also have a 50% long 1470, helping the VIX have buyers. So when we trade 1560, we are seeing sellers in the VIX and therefore buyers in the indices, the S&P, the NASDAQ, the Russell. They're getting buyers when the VIX tests the short. When the VIX comes into its long at 1470, we're seeing the indices start to sell and head lower. So when this breaks out either way, that could give us a signal for the indices of where they're likely to go. If the VIX breaks above 1615, then we're going to have room until 18 to head higher in the VIX. And so we could see the indices head lower until 18 becomes retested. If we were to break below 1435, that would take out the long setup in the VIX. That could allow for more shorts in the VIX and therefore more longs in the indices. We can see the indices head higher until we complete targets below at around 12. So we have all of this room here in the VIX as it heads lower for the indices to head higher. So I'm keeping an eye out for the VIX. It's very useful and can be helpful when I'm trying to make trading decisions, not just with futures and day trading, but also positions and investments. So I'm keeping an eye out for this and seeing when we break out, which way are we breaking out, and therefore I can trade accordingly. That's all I got tonight. If you found this helpful, please leave a like. If you have anything you want me to cover, feel free to comment. I can make another updated video maybe next week about this, and we'll see what happens. Otherwise, thanks for tuning in. Please like, please subscribe, share, and I'll catch you guys in the next one.